1 million people have already left New York City. So this is hugely significant. Okay, hugely. This is a big deal. And investors are poised to make a lot of money if they're following my pandemic investing strategy.
Hi, Devinder here from Midland Property Investments, and welcome to another episode of Property Question Time. Today, I've got a very, very special guest, all the way from the US of A. Now, his company's called Empowered Investor Network. He's got a fabulous podcast called The Creative Wealth Show, and a new website, which is the main reason I've asked him on the show. It's called thepandemicinvesting.com. He is Jason Hartman. Welcome, Jason.
Thank you. It's good to be here. And let's talk about pandemic investing. There's a lot of things are changing in the world, so it's a good time to talk about this.
So, Jason, I've been following George Gammon and people like Jim Ricard, and George regularly has you as the expert for real estate expert on America. Now, the reason why I asked you on the show was that I feel that a lot of trends that happen in America come very quickly to the UK or to England. So I thought, okay, if I could get your opinions on what's happening with the pandemic, of course, and how to best navigate it in the US. So can you tell me what's happening with the market? Or I know there's 3 markets in the US. Can you quickly tell my viewers?
Yeah, there's 3 markets in the entire world. This applies worldwide, what I'm about to say. Every market can be categorized into 3 main types: linear markets, cyclical markets, and hybrid markets. And basically, most of the world is a linear market, whereas if you're looking at a graph, right, with the axis time on the bottom and dollar value on the side, it's very boring. It just kind of chugs along. The properties appreciate slowly. There's nothing, hugely significant about it. A cyclical market, though, is the opposite of linear. That on the graph looks like a roller coaster. It bigs ups and downs. And then a hybrid market is in between the two, as the name would imply. Okay. Most of the world is a linear market, but most of the attention span and the news is about cyclical markets because they're much more interesting and newsworthy because they have these ups and downs.
Yeah, so, right.
When things are boring and just moving along in a nice direction, there's not much to say about it. It's not very newsworthy. So we believe in investing in these good linear markets, the boring markets, because those markets have the best cash flow and the best return on investment over time.
Right.
And they're much less risky, whereas the cyclical markets are very risky. Now, just to give people some examples of this, like I said, the cyclical markets that look like the roller coaster on the chart get all the attention. So they are the cyclical markets around the world. In the U.S., there are places like the West Coast of the United States, the expensive markets there.
Right.
The southeastern part of the United States in South Florida, near where I live, Miami is a very cyclical market. And then the expensive northeastern markets, New York, Washington, D.C., Boston, etc. Those are all cyclical markets around the world. There are places like London, Paris, Dubai, Hong Kong. Those would be good examples of cyclical markets. So you see, these are a fairly small number of cities and locations, but they are the trophy cities of the world, and they get all the attention and all the notoriety. Also, Vancouver, Toronto would be other examples in Canada, for example. There are others, but you get the idea.
Yeah.
But the vast majority of the world is linear and boring, okay?
Right.
And makes a much better investment. And so, interestingly, what we see now during the pandemic and post-pandemic world, although this is hardly over, is we see a lot of migration where people are leaving cyclical markets, high-density city environments, urban environments, for suburban or even rural environments in some case. These are much more linear markets. So the trend is actually twice as good as it was before COVID, because now not only were those linear markets already a good investment, but now there's this mass migration toward those markets, making them an even better investment now.
Okay, so the linear markets, yeah. So I have got some properties in the cyclical market, and I'm looking to sell those. Yeah. So with linear markets, would you say there's hardly increase in the prices per year, or 5% or 2%?
Well, it depends where. I mean, linear markets aren't all the same,
right?
But certainly those prices in linear markets are 3 to 6% annually, maybe.
Right. Okay.
But interestingly, on my podcast just yesterday, you may have heard the episode by now, I cited some examples of linear markets that are appreciating greatly. For example, Memphis, Tennessee, a market that we've been in for many, many years. I can't remember the exact number. I think it was like 10.5 or 13% or something year over year appreciation. I mean, it's absolutely phenomenal. And this was, these are stats from the second quarter of this year. The quarter where economic activity was massively suppressed, lockdowns, quarantines, etc.
So, okay, I'm just trying to tie this to the UK as well. So, what was the cause of that? Is this mass migration to suburbia, or is this the pent-up demand? What caused that, do you think?
Well, that's a really good question. It's good that you noticed the pent-up demand issue, because that is part of it. Usually, at least in the US and probably around the world, but spring, in the southern hemisphere is the opposite of northern hemisphere. So in our spring in the northern hemisphere, that is the market where it's the most active, where most people are selling their homes, most people are buying homes. And because of the COVID lockdowns, we never really had a spring selling season. And so that was postponed. And so there was definitely some pent-up demand from that. But there's also a whole bunch of new demand that was created. Some estimates say 1 million people have already left New York City. So this is hugely significant. Okay, hugely. This is a big deal. And investors are poised to make a lot of money if they're following my pandemic investing strategy. And by the way, you may already have taken advantage of this, but all of your listeners and viewers can go to pandemicinvesting.com and get a free book. We did an entire book on pandemic investing, which really outlines some of the trends in more detail.
Okay, we'll put that your website in our link. If someone said to you, okay, Jason, can you give us 5 main trends of the pandemic investing, what would you say there would be right now?
The big mega trend is migration. This mass migration out of urban environments. In the US, 84% of the population is considered to live in urban markets. Okay. That's just a huge number. And these people are moving. Not all of them will move, but many of them will. And so as they're moving, we've identified really 6 sort of cohorts and reasons for this. Number 1, the urban dwellers moving to lower density environments. The danger zones for civil unrest, for virus spread are elevators and mass transit or any crowded areas. Okay, so that's the first one. Another one would be roommates. Roommates are now forced to work at home. And they used to have extra space. Now they need that second bedroom that their other roommate is occupying, and they need that as a home office. Okay? And to add to that, when you look at families, if you've got 2 adults and 2 kids, those kids are now studying at home. So
right now, my wife's working at home. I'm working at home. My daughters are here as well. So I know what you mean.
And that's unusual. Everybody needs more space now. So that's another reason to move to suburbia. Okay. And the US is a pretty unique market in terms of the entire world, because the US pioneered the whole idea of suburban living. That really is not common around the world. And it's because in the post-World War II era, the baby boomers as they were starting their families and the troops came back from the war, they needed a new home. They needed some land. And America was always very fond of the automobile, for better or worse.
Right.
And so America is a driving-based culture. And in the U.S., that really allowed suburbia to happen. That didn't happen in Europe. I was born in Europe, okay?
Right.
And in Europe, it's obviously very different. You know this, and all of your listeners and viewers know it too.
Yeah.
Because there you've got city centers and mass transit and all of that stuff. But with COVID and with civil unrest, another problem, people are concerned about living in environments like that.
How are things in the US? Have things calmed down, or there's still some civil unrest in
there's
US?
Definitely still some civil unrest. I mean, these protesters are idiots, largely. I mean, these are just people that don't even know why they're protesting. They don't know what they're protesting about. They just basically need something to do, something to believe in. It's absolutely stupid. This has nothing to do with the original idea anymore. It's just dumb, frankly.
Okay. And so regarding the trends, is this people of a certain age group, or is it across all age groups?
Well, it's across many ages. That's another good question, because another group I didn't talk about, we talked about remote workers, we talked about roommates, we talked about families, we talked about urban dwellers. There's also, this is a smaller thing, but it's definitely part of it, remote working out. Okay. Yeah. The gym is closed. So people need a spare room to exercise, right?
Yeah. Yeah.
And a lot of times they're not allowed to leave their house. So that's really unbelievable. And then multi-generational living. As we've seen, some of these idiot politicians we have here in the U.S. have told people to, they put the COVID patients in the nursing homes.
Yes.
And so the infection rate was just skyrocketing. People were dying. And now, children and elders are scared of these assisted living and nursing home facilities. And so they're going to be more and more living at home. Now, around the world, this is totally common to have multi-generational living. In the U.S., it's not that common. But it's going to become more popular in the U.S., where you're going to need extra space for the mother-in-law, for the grandparents, whatever.
Right.
Maybe it's another structure on the property. Maybe it's just an extra room, whatever. But extra space for multi-generational living. All of this means the remote working out trend, the remote working at home trend, everything just means people need larger homes.
Wow.
And more suburban homes, because they don't need to commute to work anymore. The adoption of telecommunications has been great. It's not a new technology, but finally people are actually using it, like we are now.
Yeah, of course. Yeah. Okay. So okay. So one of the things we talked about just before we started was I went onto your website. I get some emails or properties in America. So we're just comparing what kind of returns on investment. So, and I was quite surprised that some of the properties I'm getting from yourself, from your website, was the return on investment was 30%. That seems incredible.
Well, I know it does seem unbelievable to some people, but look at income property is the most historically proven asset class in the entire world.
Right.
We all know people that have become very wealthy by owning rental housing. Okay. Yes. So that's the first thing I would encourage you. We don't know people that became wealthy in the stock market.
Right.
Unless they're an insider like Warren Buffett or, the CEO of some company or, Ivan Boesky or, Carl Icahn. I mean, these are, famous people. They're insiders. They're not like you and me, right?
Right. Okay.
So income property is the game anybody can get into. You don't have to be an insider and you can make a fortune. But the reason those returns are so high, so if people go to jasonhartman.com and they click on the properties page, and they browse properties in any of the markets we're recommending, whether they be markets in Florida, Tennessee, Texas, Georgia, Arkansas, Indiana, many other markets, right? And you'll see these pro formas that literally show you every single number. Many, many numbers are on the page. I should count how many metrics there are. There are many. You've seen them. And on those pro formas, what you come to realize when you understand how to analyze a real estate deal, and by the way, I've got a free video on this for your listeners as well. I should tell them about that. But income property is a multi-dimensional asset class. So you don't just make your return by buying low and selling high. You make your return by buying low, selling high, getting cash flow in between, getting tax benefits, getting leverage, getting what I call inflation-induced debt destruction. That's a trademark term of mine. And because of these multiple forces that give you a return on investment, that's why you can get these returns of 20, 25, 30%, or even more sometimes. Now, granted, everything is risky. Okay. And things don't always go as well as planned. There are certainly problems. No investment is without problems. But we've seen many of our clients do much better than that in terms of return on investment. But here's what I encourage you to look at. Even if it only goes half as well as expected, if someone gets a 15% return on investment, who can complain about that in an era where you get literally zero on your savings? And the stock market is so volatile and risky, you may lose your money. So it's pretty good.
Jason, I was quite impressed. So I looked at some of the performers, and I was quite impressed with the amount of detail and the breakdown about maintenance, about voids. I think because normally, I get sent emails from England. Nobody writes down all about maintenance, about voids, and things like that.
I think maintenance and vacancy and repairs and problems and management fees. People conveniently, a lot of disreputable people out there conveniently leave these metrics out of their analysis. And I tell you, that is fake. Don't trust people that do that.
So I was very impressed, and I was looking at my properties just before I came onto the Zoom call with you, and my kind of returns are around about 12 or 13%, and that's a single family home. I know in England you can do multi-lets much better than that.
We went over the numbers, and the problem with the markets that you're talking about is your rent to value ratios just aren't very good. And by the way, I do need to wrap up for my next appointment. So we can definitely continue this conversation and do it again. But I'd encourage everybody, go to pandemicinvesting.com, get the book, and go to jasonhartman.com, my main website. And on the front page, there's a free 27-minute video that really, if you know nothing else, this will really help people become great investors and help them analyze deals so as not to make mistakes. It's a completely free video, no strings attached, 27 minutes, and you can learn to become a fantastic investor. And that's on the front page of jasonhartman.com.
Okay, Jason, I want to thank you for your time. What we'll do is I'll put all the links in the YouTube part below, and hopefully we'll get back in the show again and talk a bit more how to invest in America and see whether it's worth for the UK investors to invest in America.
Absolutely. Let's do it again sometime. And to you and your viewers, happy investing.
Okay, take care, Jason. Thank you very much.
Thank you. Bye-bye.
Bye-bye.